Right now, in towns and counties across this country, there are senior homeowners paying hundreds or even thousands of dollars more in property taxes than they legally have to. Not because they did anything wrong, not because they don't deserve relief, but because nobody ever told them that one simple form could lower their tax bill every single year for as long as they own their home. If you are over 60, or you have a parent or grandparent who is, this is information that could put real money back in your pocket before your next tax bill arrives. Here's the part that makes this so frustrating. These senior property tax relief programs are not secret. They are written into state law in nearly every state in the country, but most assessors' offices do not call you up and offer this to you. You have to know it exists and you have to ask for it. That is exactly why so many longtime homeowners, people who have lived in the same house for 20, 30, even 40 years, are still paying full price on a tax break they qualified for years ago. By the end of this video, you are going to understand exactly what this exemption is, who typically qualifies, the different forms it can take depending on where you live, and the simple steps to find out if your house qualifies. We will also cover the mistakes that cause perfectly good applications to get rejected and what to do if your local office tells you no. This is not complicated. It usually takes one form and a handful of documents you probably already have in a drawer somewhere. Before we go further, a quick note on accuracy. Property tax rules are set state by state and sometimes county by county, so the specific numbers and forms will look different depending on where you live. I am going to give you the general shape of these programs and tell you exactly where to verify the details for your specific address, because getting this right matters more than getting it fast. Let's start with the basic idea behind senior property tax relief. Most states recognize that property values and the taxes tied to them tend to rise faster than a retired person's income. Someone living on a fixed Social Security check or a modest pension can find themselves squeezed out of a home they have owned for decades, simply because the neighborhood around them became more valuable. States responded to this problem by creating programs that either reduce the taxable value of a senior's home, freeze the tax bill at a certain level, lower the tax rate applied, or in some cases, let seniors defer paying the tax until the home is eventually sold. The most common version is called a homestead exemption for seniors, sometimes labeled an elderly exemption, a senior valuation freeze, or a low-income senior exemption, depending on your state. In plain terms, this program reduces the assessed value of your home before your property tax bill gets calculated. If your home is assessed at $300,000 and your state allows a $50,000 senior exemption, your tax bill gets calculated as if your home were worth $250,000 instead. Depending on your local tax rate, that single adjustment can mean anywhere from a few hundred to well over $1,000 in savings every year. A second version, often called a tax freeze or assessment freeze, locks in your home's taxable value at whatever it was the year you qualified, even if the market value keeps climbing after that. This one is especially valuable in fast-growing areas where home prices have jumped sharply over the past several years. Imagine your home was worth $200,000 when you turned 65 and qualified for the freeze. 5 years later, similar homes nearby are selling for $350,000. Without the freeze, your tax bill would have climbed right along with that market value. With the freeze in place, you are still being taxed as though your home is worth $200,000. A third version is sometimes called a circuit breaker program. Instead of looking only at your home's value, this one looks at the relationship between your property tax bill and your actual income. If your property taxes take up more than a certain percentage of your income, usually somewhere between 3 and 7%, depending on the state issues you a credit or a direct refund to cover the difference. This program tends to help lower income seniors the most because it is built around what you can actually afford to pay, not just what your house is worth on paper. There is also a deferral option in a number of states, which works differently from the other three. Instead of reducing what you owe, a deferral program lets you postpone payment of some or all of your property tax until you sell the home, transfer ownership, or pass away, at which point the deferred amount is repaid, often with modest interest, out of the home's eventual sale proceeds. This can be a useful tool for someone who is house rich but cash poor, meaning the home itself has real value, but the monthly income to cover rising tax bills simply is not there. It is worth understanding the interest terms carefully before choosing this path, since it does reduce the amount eventually passed on to heirs. Now let's talk about who typically qualifies, because this is where a lot of confusion happens. Age requirements usually start somewhere between 61 and 65, though a handful of states set the bar at 60 or even lower for certain programs. Most programs also require that the home be your primary residence, meaning you actually live there, not a rental property or vacation home. Many programs include an income limit, and these limits vary enormously from state to state. So, a number that applies in one place may be completely different just across a state line. Some states also extend similar relief to homeowners who are permanently disabled, regardless of age, and some offer additional relief for veterans on top of the standard senior exemption. Here's something important to understand. Qualifying for one of these programs almost never happens automatically. Your local assessor's office does not comb through its records looking for eligible seniors and automatically lowering their bills. In the vast majority of cases, you have to file an application, and in many states, you have to file it again periodically to keep the benefit active. That single fact, the requirement to actively apply rather than simply qualify by birthday, is the main reason so many eligible homeowners go years without this relief. They assume that turning 65 automatically triggers some kind of discount, and it simply does not work that way. If you have been finding this helpful so far, take a second right now to subscribe to this channel and turn on notifications. We cover exactly this kind of overlooked benefit information regularly. The kind of thing that can genuinely change your monthly budget, but rarely gets explained in plain language anywhere else. Let's walk through exactly how to find out whether your home qualifies. The first stop is your county assessor's office, sometimes called the property appraiser's office or the tax assessor, depending on where you live. Every county in the country has one, and most maintain a website where senior or elderly exemptions are listed under property tax relief, homestead exemptions, or senior services. A simple search using your county name along with the words senior property tax exemption will usually take you straight to the right page. If searching online is not comfortable for you, a phone call to your county assessor's office or a visit in person works just as well, and the staff there are used to walking people through exactly this question. Your state's Department of Revenue or Department of Taxation is a second useful resource because some senior relief programs are run at the state level rather than the county level, particularly circuit breaker and deferral programs. Their websites typically have a section dedicated to property tax relief for seniors, and many publish a comparison chart showing every relief program available in that state, along with its income limits and application deadlines. A third resource that many people overlook entirely is their local area agency on aging. These agencies exist specifically to help older adults navigate benefits like this one, and many offer free one-on-one help filling out the application itself. If you are not sure how to reach your local agency, calling the Elder Care Locator, a free national service connecting seniors to local aging services in their area, can point you in the right direction. This is a genuinely useful starting point if government websites feel overwhelming or confusing to navigate alone. Once you find the right program for your area, the application itself is usually refreshingly simple. Most require a short form, along with proof of age, such as a driver's license or birth certificate, proof that the home is your primary residence, such as a utility bill or voter registration showing that address, and if the program has an income limit, some documentation of your income, such as a tax return or Social Security benefit statement. Many counties allow you to mail the application, drop it off in person, or in a growing number of places, submit it online through the assessor's website. Let's pause for a moment on a few questions that come up constantly when people first hear about these programs. One common question is whether applying for this exemption will trigger some kind of reassessment that raises your home's value in other ways. In most states, applying for a senior exemption is a completely separate process from a general reassessment, and simply filing the paperwork does not cause an assessor to take a closer look at your property for other purposes. Another common question is whether receiving Social Security income disqualifies you. And the answer is almost always no, since most income limits are set specifically with retirement income in mind, and Social Security benefits are factored into the calculation, not treated as a barrier. A third question people ask is whether they need to hire someone to help file the paperwork. For the vast majority of homeowners, this is something you can do yourself in under an hour. And any office that tries to charge you a fee just to fill out a basic government exemption form should be treated with real skepticism, since these applications are designed to be free and accessible without a middleman. If you are helping an aging parent or relative with this rather than applying for yourself, a few things are worth knowing. Many states allow an adult child or caregiver to submit the application on behalf of a senior homeowner, sometimes with a simple authorization form, sometimes without any extra paperwork at all if you are simply assisting them at the counter. Pulling together the documents in advance, things like a copy of the deed, a recent tax bill, proof of age, and a recent income statement, makes the actual filing appointment go quickly. This is also a good moment to check whether your relative is already receiving every other senior benefit they qualify for, since these programs often get discovered together rather than one at a time. Now, here are the mistakes that most commonly cause these applications to get delayed or rejected, because avoiding them will save you real time and frustration. The single biggest mistake is missing the filing deadline. Many counties only accept senior exemption applications during a specific window, often in the first few months of the year, and an application submitted even one day late can mean waiting an entire additional year before the exemption takes effect. Mark your calendar the moment you find your county's deadline, because this is the detail that trips up the most people. The second common mistake is applying for the wrong type of homestead exemption, or failing to also keep your basic homestead exemption active while adding the senior exemption on top of it. In many states, the senior exemption is an additional benefit stacked on top of a standard homestead exemption that you may need to apply for separately if you have not already done so. Check whether your county requires both forms or just one, because assuming they are combined when they are not is an easy way to leave money on the table. The third mistake is forgetting that some programs require renewal. While a number of states make the exemption permanent once granted, as long as you continue living in the home, others require you to reapply every year or every few years, sometimes simply by mailing back a short renewal card confirming nothing has changed. Missing a renewal notice, especially if it arrives buried in other mail, can cause the exemption to lapse without you realizing it until the next tax bill arrives higher than expected. If you do everything right and still receive a denial, you are not out of options. Every assessor's office is required to provide an appeals process, and these appeals are far more common and far more successful than most people expect. Start by requesting a written explanation of exactly why the application was denied, since the reason is often something fixable, like a missing document or a misunderstanding about which address is your primary residence. From there, most counties allow you to submit additional documentation or request a hearing with a local board of review, often without needing a lawyer at all. If you know someone, a parent, a neighbor, an older relative, who this might apply to, take a moment right now to share this video with them directly. A lot of senior homeowners do not spend much time browsing financial content online, which means the people most likely to benefit from this information are often the least likely to come across it on their own. A 5-minute conversation or a forwarded link could be the reason someone you care about pays less in property taxes for the rest of the time they live in their home. Let's talk briefly about realistic numbers, because seeing the impact in dollars makes this easier to picture. Suppose a senior exemption reduces your home's taxable value by $30,000, and your local tax rate is roughly 1.5%. That adjustment alone saves about $450 every year. Over a 15-year retirement in that home, that is more than $6,000, money that simply stays in your pocket instead of going toward a tax bill, without you having to change a single thing about how you live. In states with larger exemptions or circuit breaker credits tied to income, the savings can run considerably higher, sometimes into the thousands annually for lower income seniors. Your actual savings will depend entirely on your home's value, your local tax rate, and the specific program your state and county offer. So treat these as illustrations of the potential, rather than a guarantee of your exact number. One more thing worth mentioning, because it protects you rather than just informing you. Be cautious of anyone who contacts you out of the blue offering to file this exemption for a fee, especially if they ask for payment up front or want your social security number over the phone before you have verified who they actually are. These applications are free, filed directly with your county or state, and no legitimate government office will ever pressure you to act within hours or pay a service charge to access a benefit you already qualify for. If something like this happens to you, hang up and call your county assessor's office directly using the number listed on their official website to confirm what is real. It is also worth understanding why this gap exists in the first place, because it helps explain why active filing matters so much. Property tax systems were largely built for efficiency, not outreach. Assessors are responsible for calculating and collecting taxes accurately, not for tracking down every resident who might qualify for a reduction. Lawmakers created these senior relief programs with good intentions, but the administrative burden of actually claiming the benefit was placed on the homeowner. That structural gap between a program existing on paper and a homeowner actually receiving it is exactly where so much unclaimed relief sits today, year after year, across nearly every state in the country. So here is where that leaves you. If you are over 60 or close to it and you own the home you live in, there is a real chance you qualify for some form of property tax relief that you are not currently receiving. The path forward is simple. Look up your county assessor's website today. Search the words Senior Property Tax Exemption alongside your county and state and see exactly what programs exist where you live, along with the income limits and deadlines attached to them. If anything is unclear, call the office directly or reach out to your local area agency on aging for free guidance through the process. To recap everything we covered, senior property tax relief generally comes in four forms: a reduction in your home's taxable value, a freeze on that value so it cannot keep climbing with the market, a circuit breaker credit tied to your income relative to your tax bill, or a deferral that postpones payment until the home eventually sells. Qualification almost always requires actively applying rather than waiting for it to happen automatically. And the biggest risks to watch for are missed deadlines, applying for the wrong exemption type, and forgetting renewals. If you are denied, an appeal process exists and is used successfully more often than most people assume. This is the kind of benefit that exists precisely because lawmakers understood that a fixed retirement income should not be squeezed by a rising property market. But a program sitting quietly in state law does nothing for you until you go find it and ask for it by name. Take the time this week, even just 20 minutes, to look up what is available where you live. It could be the most valuable 20 minutes you spend on your finances all year. And it could mean a smaller tax bill landing in your mailbox every single year you continue to call that house home.